Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can follow me on Twitter and talk to me on Patreon. This second quarter is still looking ugly. Well, actually, it's looking even uglier with all the inflation nonsense. We're seeing Tesla stock at prices we never again expected. But that's the thing with Tesla, is it's always going to drop again until it goes through its next cycle. And now I'm doing something about all these massive swings in the price. And finally, I'm trading through. Although I didn't get the bottom of this dip, or is it even the bottom yet? Well, let's talk about how much uglier things may get first. Of course, we don't appear to yet be out of the woods in China either. Shanghai is really what is required to carry this company. It carried the company last year, and it's going to need to carry the company this year, which makes it doubly hard if it's locked down or suffering supply chain issues. We did hear how quickly Shanghai were able to get back to 80% production level within about a week or two from the shutdowns in April, with targets to hit 2,600 vehicles a day by the 16th of May, according to Reuters. Now, 2,600 vehicles a day in China alone, that's huge. If it continued at that pace with no downtime, then that's 950,000 a year. Look, let's face it, China is pretty much already at 1 million a year run rate. When their ducks are in a row, it should be in excess of 1 million by the end of the year, including downtime. If we ever had an inkling that China was going to be that big and that soon, back at the start of last year, then Tesla's stock price would have likely surpassed $1,000 then. The stock is the same price in December 2020 as it is at the time of this video. And look how much has happened since. The China expansion, 4680 cells with structural batteries and front and rear castings, 2 new massive state-of-the-art gigafactories, FSD beta progress, Plaid, the fastest production car on the planet, even humanoid bots announced. We also went from a PE ratio of 1,000 to under 100. Yet the stock price reached a low nearly $300 less than its high at the start of last year. Almost a year and a half ago even, the stock price was nearly 50% higher. Just to give you some perspective, on top of the China issues, we have also recently had Elon selling off billions of dollars more of his Tesla stock. This has possibly brought the stock down a further $100 or something, and it will take a little while to recover. So with Elon selling, China, 4680 delays, war, oil prices, supply chains, inflation, interest rates, recession, etc. To be honest, I think Tesla's stock price is holding up reasonably well. We're being hit from all sides, but within a year or two, all of these issues should have hopefully gone away. It's times like these when you need to get a grip and face reality to gain perspective. Go through all your mantras or affirmations about how good a car Tesla can make, about how smart the CEO is, and remind yourself he has another company that actually lands rockets. Tesla make the best cars. Tesla make EVs at the lowest cost. Tesla make the best EVs. They have the most advanced FSD, etc., etc. Keep telling yourself enough until you've made up your own mind, blocking out all this other noise. I mean, if you look out to the media, you're likely going to get doom and gloom. I have the usual people telling me Tesla will get down to $100 or $200. Now, obviously, no one knows what will happen, but if Tesla ever did get that low, it's not likely to be a Tesla-related issue. It would be a market-related issue, and everything will be cheap. And the economy may look so bad that your Tesla paper loss is far from your biggest concern right now. Those are dystopian-type price targets. We don't need to go there. We'll try and keep within a likely reality as much as possible still. Having said that, there is a possibility of going sub $600. I've stopped buying leaps currently. I had 6 I wanted to buy to replace the 6 I sold when the stock was around 1100. I think I'm going to try and be patient. It's not easy, as when it bounces back, you definitely have a very fickle attitude and will quickly ask yourself, what was I thinking? Tesla was under $700. Why did I not buy it? Don't punish yourself too much. This is why I did buy 2 leaps so far, just so I didn't miss this dip. Of course, there is the other side when it just keeps dropping and you bought too early. But it's possible we go into an actual recession and maybe the stock will stay trading between $600 and $800 for the rest of the year. Still lots of good buying opportunities, except it becomes harder to find conviction in a recession. Tesla will still remain a growth company throughout this time though. There is a lot of growth left for Tesla. Anyway, we have this Q2 among us. We always knew it was going to be bad, but the lockdowns make it worse. And we even have a Bitcoin loss to add too. However, we will have higher ASPs and improved margins for Fremont and Shanghai, but we'll also have the reduced margins from Berlin. I'm not sure though, we'll even be seeing any deliveries from Austin this quarter. There don't appear to be any signs soon, which means we may not see as big a hit for this quarter as we could have. I think I need to work out a model that gives us a good idea of how much Berlin may be losing. Personally, I still think Q2 will see a lower EPS than Q1 due to this. I'll run some numbers for it soon though. I believe this is fairly priced into the stock already, but before I was expecting a larger loss from Austin. Really though, what is Austin doing? It's obviously still 4680 production line issues, and this is really what is holding up the entire company. It sounds like they may be facing issues with the battery electrode process still, and trying to automate various stages. As most of you know, I think batteries are the core of this business, and the 4680 being the best EV cell for mass production in the world, well, it's quite a big deal. I wish there was more news to report on the progress of the 4680 cell or the new Austin Model Y, but it seems to have gone radio silent. All that anticipation and build-up to finally discover what these 4680s can achieve, to be left with just an impressive drone show, was a little disappointing. But still, over a month on now from Cyber Rodeo, and we haven't had any updates. This is still the most exciting element of Tesla's business, as it all grows from here. We're just seeking validation that it can be executed. I don't mind if it even takes another 2 years, as long as it happens. I believe the value of that battery and associated technology alone may add an extra zero onto the stock price within time. Hence my enthusiasm on progress with this cell. But we've been left hanging here in limbo somewhat, just trying to make predictions on the rest of the business. Anyway, fortunately, Tesla China alone can pretty much become big and profitable enough to grow into the current stock price, as long as it's not held back. Look, this was a rough time for Tesla anyway. They're still suffering with supply chains. Elon's been selling a lot of the stock, hurting the stock price. So to suddenly throw on top a potential recession as well, Tesla's going to get hurt. We all have a lot of conviction and faith in this company and its future. We put the CEO on a pedestal and have seen him work wonders. For most of you, just buying stock, in reality, it doesn't matter if you bought $800 or $600. You'll still be happy in a few years when it's around $3,000. It just gets a little trickier if you're trading options, when you have an expiration date. Just think, will you be kicking yourself in a few months if we were trading above $1,000 again? Did we just miss the last ever opportunity of buying Tesla stock at this good a price before 4680s ramp up the entire business to the next level? Is it worth increasing your portfolio knowing you run the risk of a further drop? Are you being too greedy, waiting to get in extra cheap? We're all in different financial positions and all have different targets for our Tesla shares. As I said, I'm buying this dip slowly. I don't want to miss out from it, but I also need to catch it pretty low as I'm trading these options. I still want to see 4680 cells hit volume production. If they'd reached that, then I think I'd be leveraging myself massively right now. I'm not really concerned about any of these other short-term issues with the business. If 4680s have succeeded, I think Tesla will be able to handle a recession. You've most likely been here before many times and kicked yourself each time for not buying when it was so low. Equally, you've also probably bought on the past dips, only for it to keep dipping. Try and block out all the noise and other people's opinions and center and ground yourself to try and work out your own decision on whether it's a good time to buy. These are uncertain economic times. We don't know where currencies are going to end up, how much more inflation is left, and how high rates may end up. You need to work out what is right for your future. But either way, let me know what you plan on doing. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.